If you invest in single family, for example, let's say you invest 200K or 300K, in multifamily property, which is 5 unit and more, how much increase would happen in multifamily property? And you can get to the financial freedom. Imagine that the cash flow for this property is 40K. Today we want to compare a single family property with the multifamily property. What is your return on your equity in single family? When you invest your money in single family, is a lot different with multifamily. The return is a lot less because you can't use the net operating income, you can't use the forced appreciation, you can't use the tax write-off. So today we want to actually compare a single family property with the multifamily property and tell you exactly the difference and how much is your return. If you invest in single family, for example, let's say you invest 200K or 300K, in 5 years period, that 300K is not going to actually increase that much. It might goes to, let's say, your 300K might go up to 500 or maybe 600K. But that money in multifamily would be, in 5 years period, would be 4 times more. In multifamily property, which is 5 unit and more, you can increase the cash flow. When you increase the cash flow, you increase the NOI, and eventually when you increase NOI, you force appreciation. So the forced appreciation is something that you can actually use it in single family, and you can just use it in multifamily. So this is very important, and this comes from the cash flow. In single family, you don't have such a thing, which means if you increase the rent in single family, it doesn't affect the value of the property. You can use the forced appreciation, and you can't have the massive tax write-off that you have it on multifamily. And you can't get to the financial freedom. So when we are saying multifamily, we are talking about 4 or 5 units and more. In 5 units and more, for example, let's say you increase your rent with the amount of 300. This gonna actually multiply by 5 or 10 or 20, whatever units that you have in that multifamily, which actually helps you to have a better and higher cash flow. But in single family, if you increase the rent by 300 or 600, not only doesn't have that much effect on the property, on the income, but also you can apply the same rules that you apply in multifamily. Okay, as I promised you, I'm gonna actually show you the example of how the multifamily works and what are the numbers and how much increase would happen in multifamily properties. For example, let's say we bought 15 unit property. The price that we purchased that multifamily is $2 million. We put down 25%, which is almost 500K. So the loan would be 1.5 million. Imagine that the cash flow for this property is 40K. This 40K is per year. And the cash on cash return based on this investment would be 8%. How do we get this 8%? When we divide 500K by 1.5 million, it gives us this 8%. So the cash on cash return is 8%. If we could manage to actually increase the rent by 500 per unit over the 5 years, which is not actually something out of ordinary. This is something simple to actually achieve, like increasing $500 per unit over 5 years is not something hard to do. So you can easily do that. If we increase this 500, how much your net operating income increase? You have to multiply this by 15 unit and multiply that by 12, which gives you this 90K. So in this multifamily, you could manage to actually increase the rent by $500 per unit, $500 per unit over 5 years, and that would increase your net operating income by 90K. Based on the multifamily formula, you actually, by doing this, you just increase the multifamily value by 1.5 million. You see how much value you could add in multifamily with a very short amount of activity, because in this example, we just increased the value of the multifamily by 1.5 million. How much was the original price? Was 2 million. So if you add this to actually 2 million, let me correct this. This is going to be 1.5 million. So this is a new value for this property. How long did it take for us to actually increase that price? 5 years. We assume that is 5 years, which I believe that you can actually do it in a very short period of time. So you just increase the value of the multifamily by increasing the rent, and the new value would be 3.5 million. This is just one thing that you can do in multifamily. What are the other advantages in multifamily? The other advantages is, imagine, again, the same 15 unit, 2 million, and we now want to talk about the cost segregation study. What is the cost segregation study? In multifamily, you have a massive tax write-off rules. If you could use those rules, and if you can actually use it very properly, if you can use it very correctly, you can actually write off the property which is located in that commercial property within 27.5 years. And you can write it off in 5 years. I'm not sure if you understand that correctly, but usually, because we sell the multifamily property in 5 years, we don't usually keep it more than 5 years, we can write off the property, we can depreciate, we can actually write off the property tax by the depreciation of the property. In our example, we can write off 120K for next 5 years, which is a very big amount of money. How much was your cash flow in this property? 40K. How much you would write off? 120K. So not only you can write off the cash flow, but also you can write off 80K more, which if you have a second job, you can write off that income as well. So this is a huge, massive tax write-off that you could get with multifamily. If you buy a multifamily, not only you can write off the income that you're making from that multifamily, but also you can actually write off your income tax, which is a very nice and unique things that if you buy multifamily you can use. Which is a very nice, unique things that you can use if you buy a multifamily.